This stimulus funded by the Fed, remember the quantitative easing, then led to the fastest stock market rally that we have seen in the history of time. So, if you're interested in tools that they have to make that happen, number one is they can print money and lend it to the United States government. And number two is they can adjust interest rates. In 2020, after the pandemic hit, the Federal Reserve Bank wanted to stimulate the economy because the stock market was falling at the fastest rates that we have seen since the Great Depression. So they did two things. Number one, they cut interest rates all the way down to zero. And then number two, they launched what was called QE, quantitative easing, which was money printing. The Federal Reserve Bank started printing billions and billions, actually trillions of dollars. That way they could lend that money to the United States government, and then the government would then spend that money in our economy. How did the government spend that money? They spent it in the form of stimulus checks. They spent it in the form of PPP loans. They spent it in the form of grants. They spent it in the form of unemployment checks. This stimulus funded by the Fed, remember the quantitative easing, then led to the fastest stock market rally that we have seen in the history of time. So 2020, we saw the fastest stock market sell-off ever, and then we saw the fastest stock market rally ever, both in the same year. What caused that shift? This right here, quantitative easing. Now this quantitative easing might sound good because stocks rally and everybody's making money and everybody has money, but there was a consequence, because if you remember back in 2021, after this quantitative easing started, we then started to see the inflation problems, because now we were seeing inflation at the highest levels that we have seen in 50 plus years. That was when in 2022, the Federal Reserve Bank put an end to QE, quantitative easing, and they started QT, quantitative tightening. Quantitative tightening, QT, is the opposite of QE. So QE, quantitative easing, is printing money, that way we can stimulate the economy. Quantitative tightening, which started in 2022, that was now where the Federal Reserve Bank is trying to pull money out of the economy, reducing how much money is out there. So we saw this quantitative tightening happen between 2022 through 2025. But that changed on December 1st, 2025, because the Federal Reserve Bank announced that they're ending and have ended quantitative tightening. Why? Because they're concerned about the job market, because they're concerned about the economy, and they want to stimulate again. And you bet that has investors excited, because now they're thinking, if more money printing is going to happen, could that help boost markets again? Now I'm going to talk about why this matters for you and your investments in just a second, but this is why Wall Street and every investor is paying such close attention to this, because this is going to change the way investing works in 2026.